Good afternoon, good evening, good morning. Wherever you're hailing from today, it is a pleasure and an honor to be speaking with you again. My name is Michael. I am the host today, the founder, the big kahuna, the head cheese, honcho, honk if you love Jesus. We are here today to explore a very interesting indicator, a new tool that's been helping thousands of traders worldwide beating banks at their own game, using a method that, though a century old, has been perfected with the advent of computers and data mining and powerful platforms like the one we'll be demonstrating here today. Before we get started, I want to just welcome both new and old customers alike and give those of you an opportunity that are here checking us out to have a voice. If you're a new customer today, if you're a prospect, someone who saw us on the web, you tried our video demonstration, you've been following along with the forecasts, can you please tell me if you're a new customer only? Don't sneak in here if you're an existing customer, I'll know it. I don't want to embarrass either of us. Let me know the market that you're trading and then your trigger time frame, the size bar that you're taking your trades off of. So for a minute, if you're an E-mini S&P trader, an E-mini NASDAQ trader, or a crude futures trader, then your trigger time frame is the 5-minute time frame. Go ahead and type 5M. If you're a Euro US dollar trader and most of your signals come off the 60-minute chart, you can let me know that too. If you trade options and you're looking at Tesla or Nvidia or GameStop, and you're looking at end of day data, large daily swings, you can type that in as well. Also, if you're looking at Ethereum or Bitcoin, we can take a look at those in addition to that. So if you're here today and you're a new person to the family, you are wondering if this software will work for you or not, do me a favor, just type that information into your GoToWebinar chat box. I promise we don't have an army of college students ready to call you right after the webinar because you typed something. Any takers on that before we get started? Colin? Yes, no? Ted? Ted says all of the above except Bitcoin. Okay, thank you for that, Ted. It helps me a lot, guides me in the presentation, so I don't go down too many rabbit trails on my own. Duck trails, rabbit trails, duck trails. Okay, Ted, we're gonna focus on you. You're the only person. Here's Larry. Larry, thank you for your contribution. 6E on the 15-minute chart, GC on the 10. GC on the 10. So the euro currency futures on the 15-minute chart, gold on the 10-minute chart. Last call on the new customer express. Woo woo. Anybody? Going once? Hey, Dave. Dave, are there any instruments you're interested in that you play around with? SPY, Q. Colin says the NASDAQ. Colin, what size bar on the NASDAQ are you taking trades? Beautiful for SPY. Are you looking at a 1-minute chart, a 5-second chart, a 15-minute chart? Where do you usually hang out? 5-minute, 1-minute, and Q. Wow, I have quite a bit to work with here today, and I appreciate that, guys. So we're going to get started. We'll focus on Dave and Colin and Larry and Ted's needs. Will this help me or hurt me or do nothing in either category? And we'll make sure we cover all of those. So what the heck are we doing here? Back in 2009, I was working with my best friend and we were learning how to lose lots of money trading as well as enrich unscrupulous fraudulent vendors in the educational and indicator space. And we donated somewhere in the neighborhood of $50,000+ to Goldman Sachs, various brokerages, and trading vendors. So we were philanthropic about 15 years ago, David, and we decided that those people didn't have enough money, and so we were going to give them some of ours. And when everything we tried didn't work, and every person that we met was essentially the devil with a sheepskin coat on, we turned inward. My partner and I, my best friend and I, are engineers by trade and by choice, and we've built things. Whenever we can't find the right tool in life, whether it's an oversized ratchet or something on par with machinery that we use or a part for our trucks, we make our own thing. And so we use computer-aided design and drawing and 3D printing and TIG and MIG welding and various milling operations, lathes, to make the part we need to do the thing we want done. And 13 years ago, we built a company based on an indicator predicated on the fact that our belief was true, that markets were rigged and banks push prices up and down at certain times, but that humans on average couldn't see those times, were not capable of sifting and sorting through the vast amounts of data to find the times that these things are occurring. Now, that's a tall order. How do we prove to you, to Colin, Dave, Larry, and Ted, that this is working? Well, number one, we give out the times and directions in advance for a bunch of different markets. Then we come back together 2 days later and we see what actually happened at those times. And then we ask you to sort of be the Simon Cowell of our Trading's Got Talent review here and give us a thumbs up or an X, a pass or a fail. And so we believe that the information most people need to succeed is in the data. We believe there are patterns in what appears to be chaotic data, and that the computers we're able to purchase online and from stores are helping us do that. And so I tell everybody in each of the webinars, sometimes we look at something and it appears chaotic. There's no rhyme or reason to it, but if we have the right tool and we use that tool to sift through chaotic data, information passes through. Hey, Melissa. And so when we look at a market with our naked eyes and we're trying to see some type of a pattern, a computer, in this case an algorithm approximately 12,000 lines of code long, can sift and sort through that data and find for us times where banks are pushing prices higher or lower. Times where, hey, Robert, we just got started. Times where things are happening with irregular regularity. And so people who've studied this in the past and written books about it have all kind of come away with the same impression that something's going on. There are too many people taking advantage of statistically relevant edges and basically making as much money as they want, finding patterns in markets that are supposed to be random. And as we'll see here momentarily, markets are not random. And so again, on every Tuesday, we give out, David, an email with a bunch of times and directions for various markets. I'll show you the page here in a second. And then we wait for all day Wednesday and Thursday to pass before we look and see, how did the thing we were expecting to have happen take place? Again, can a piece of software look through the historical data and find times where companies like JP Morgan and Credit Suisse and Deutsche Bank and Goldman Sachs are cheating? So this was the link we sent out on Tuesday. This was the link we sent out on Tuesday. And you'll see here that we send out these maps of time signals in advance. So on Tuesday, we had all this information available for different markets. And this, for example, would be the signal that we generated for the Dow futures. And what's so cool about this, I think it's pretty awesome. Every one of the times that you see on this chart represent a behavior pattern that we're catching lately. So Dave, Colin, Ted, every one of these signals historically is a time in the Dow over the last several weeks where they've been pushing the price down with regular irregularity, meaning it shouldn't happen. Every one of the blue signals, the blue lines, is a target. It's a hit. The algorithm found that for whatever reason, somebody somewhere keeps pushing prices lower at these times. Does that make sense? Conversely, the times on the bottom of the histogram that we gave you on Tuesday for Wednesday and Thursday represent more targets, times that somebody somewhere has been pushing price higher with regular irregularity. For no reason other than the software found that time kept pushing price higher over and over and over again. That's the only reason those times exist. And you can't see them. I can't see them because our brains aren't wired that way. We're not quite RoboCop level intelligence yet. We're not Joaquin Phoenix in that movie She. Was it She or Her? I can't remember which one. We don't have those virtual assistants that can publish entire books for us while we're sleeping. Not yet. We're getting closer. So when we look at these signals and we come back and analyze what took place, there's some pretty amazing stuff going on. So Ted, for example, if I look here at the times that I sent out on Tuesday for Wednesday and Thursday, these were the histogram times for Thursday, today. Okay? Now, here's the part where I make the tiger disappear, and you all wonder how I did it. 8:57, 8:57 2 days ago. 9:36, 9:36 2 days ago. 10:09, 10:09 2 days ago. Larry, can we agree, and we'll look at the 6E and GC in a minute, can we agree together that the times I published for Thursday on Tuesday are the times we're looking at right now, and that nothing is updated or repainted or disappeared or reappeared and blah, 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 all the junk that other vendors do to suck you into a piece of garbage program? Everything lines up, right? The times you had since Tuesday are the times I'm working with today. Yes or no? Anybody? I was raised by a cruel woman, so I need constant validation. Would we all agree that the times that are on my chart on here are the times that we're looking at right now? 100%. Yeah, okay, cool. That's important because when we go back to look at what took place today, there's some incredibly unusual stuff taking place at those times. So, quick cursory review. This is all Eastern Daylight Time, but it'll show up on your computer, your local computer time. If you're Chicago Central Time, it'll show up Central Time. If you're Singapore, it'll show up Singapore Time. So my computer's set to Eastern Time, North Carolina. Now, Ted, check it out. 7:42, what was I expecting? A move up. 8:57, what was I expecting? A move up. 9:36, what was I expecting? A move down. Until when? 10:09. And then Ted, what happened at 10:09? 2 days after I published those forecasts and gave them to everybody. It went up, right? How long was it supposed to go up for, Robert? Till 11 o'clock. Did it go up until 11 o'clock, Ted? Woo! Boy, it sure did. Right above the previous high. By the way, in case you're wondering, that's called a stop run. Ted, they executed a stop run at the 11 o'clock signal when most people were taking the long on the breakout. But you knew better. It was supposed to go down again. Well, how long? From 11 o'clock until 12:09. Did it go down at 11 o'clock until 12:09? Yeah. And then, Larry, what happened at 12:09 when we were expecting a move up until 12:23, the end of the morning U.S. session? It went up again and put in the higher high of day at 12:33, and then drops down until 106. So, Colin, do you own the software? Okay. Yeah, you can email Ron. I'll put the address right there. And ask him about his live room. And the times never change. They don't move. They're forever what they are. Amen. So any questions you have, you can ask him about that, and he'll let you know what's up. He has a live room that meets Tuesday, Wednesday, Thursday. So, Ted, when we look at the U.S. morning session, at the signals that the software had warned us about 2 days before the market opened, can we agree, in theory at least, that the times I was waiting for something to happen, the thing actually happened 6 out of 10 times or more, as far as the signal goes, not necessarily the entry. But can we say when we were expecting things to go up, they went up, and when we were expecting things to go down, they went down 6 out of 10 times or more frequently than they should have? What do you think? Yes, no, maybe? It's kind of uncomfortable, isn't it? Because if you agree with me, you're essentially agreeing with the concept that somebody somewhere had a plan before the markets opened today. Somebody somewhere had a plan before the markets opened today. And that somebody somewhere although the reverse moves seem a bit delayed from the signal. Okay, Ted, how about I do it from this direction? Ready? If I bought at 742 and I exited at 830, I made 22 ticks. If I sold at 830 and I exited by 857, I lost 50. If I bought by 857 and I exited by 936, I made 43. If I sold by 936 and I exited by 1009, I made 101. If I bought by 1009 and I sold by 11 o'clock, I made 124. If I sold by 11 o'clock and I bought by 1209, I made 7 ticks. If I bought by 1209 and I exited by 1233, I made 26 ticks. And if I sold after lunch into that signal at 1 o'clock, I made 65 ticks. So Ted, let me put this in a framework that maybe you can understand and I can understand. Could I have picked 1, 2, 3, 4, 5, 6, 7, 8 times and been net positive by the end of the trade, assuming no stops, 7 out of 8 times, unless I was the luckiest person on the earth, or what we believe is true. So we're not talking about entries yet. We're just talking about raw signals, right? Okay, now, I'm glad you brought that up because I want to talk to you about the difference between a signal and a setup. How do we trade it? It seems like all the other vendors and all the other workshops and all the other presentations, Ted, they tell you, when you see my magical arrow, you buy. And when you see my magical other arrow, you get out. And we sit there and go, I will pay thousands of dollars every month for your magical arrow, oh great guru. And what I've learned over 13 years now, close to 3,500 customers, is that none of you knuckleheads trade the same way. Most of you trade one way. Most of you trade following the trend. You trade in the direction that the market is moving. And so, Ted, same Dave, thanks for stopping by. I appreciate you. Have a great night. So when we look at the setups, Ted, here's what we do internally when we take trades. I look for signals in the direction of the trend, and all these rules were mentioned on the page that I gave out with the forecast times. We follow a 120 period EMA. My stop is 1.5 average true range values away from the high or low of the candle. That's what these white lines are. And then I exit at the opposite time. So Ted, look at it this way. If the moving average is going higher and higher, I'm focusing on only the buying pressure signals for this setup, right? I'm entering at the close of the candle and exiting by the next candle. I'm entering at the close of the candle and exiting by the next time. I'm entering at the close of the candle and exiting by the next time. Ted, does that setup make sense? We have a specific stop, mechanical. We have a specific entry, and our exit is time-based. I know how long the signal has or should have. Okay, we call that a signal with trend. Okay, the second variation of that, Ted, is called a crossover. What if the signal originates below the moving average and then it crosses over the moving average? Well, we enter at the close of that candle. Our stop goes right below the crossover candle. And then we do the same thing. We exit by the opposite time. That's called a crossover signal. We're crossing over the moving average. And now this becomes a trend entry. Stop is much tighter depending on where the candle bottom was or top in reverse. That's setup number 2. Here's the third one that usually breaks everybody's brain. This is essentially a failure with trend. Ted, if I have a signal that's counter trend, what this signal is telling me is that historically, somebody somewhere at 9:30 was pushing prices lower and lower. Okay, think about that. That 9:30 signal is there because somebody somewhere has historically over and over pushed prices lower and lower. But the moving average is going up, Melissa. So here's how I think about it, and this works very successfully for a lot of people. If, Ted, nobody shows up at 9:30 to sell, if nobody shows up at 9:30 to sell and it climbs higher and higher and higher, then not having any guards at the gate, not having any troops on the battlefield when I show up, I can roll over miles and miles of land and gain ground. And so the way this works is the following. I have a buy stop sitting at that blue stop line. And if that sell signal fails in the direction of the trend, I put my stop right underneath the puncture candle. So in essence, we're saying if there are no guards at the bank and we walk in with our mask and our gun and we see that they're all in the bathroom when they're supposed to be guarding the vault, let's rob the vault. It's 12 o'clock. They're supposed to be here. Where are they? They're not here. Whew, an opportunity. So the absence of the behavior at the behavior time tells us it might be safe because the sellers who would stand in our way are standing on the sideline. So that's called a puncture. It's essentially a failure with trend. And now when we come back and we look at those signals with the markets that you guys are interested in, let me pull this over here and we'll take a look at some of the ones you guys were asking me about earlier. We'll take a look at we'll look at the one you guys wanted to know about, the NQ 5-minute chart. So Ted, these are all the signals through the Asian session, into the Euro session, into the US session, right? The ones that I gave you the times for were the NQ 1-minute section. So you guys were asking about the 5-minute NQ chart. I want you to see the 1-minute NQ chart. Okay, so Ted, when I look at the NQ 1-minute chart, here's how I trade it. Ready? At 119 at the candle close, I go long and I hold it until 134 for a $15 move. At 114, using the mechanical rule set, I enter at the close of the candle and I hold it until 205. Now, on the 220 signal, I have a rule that says if I get to $400, I go to break even. And I didn't quite make it to $400. It only went to 220. So in this instance, Ted, do you see how I finish a little lower than I start? Down $2 at the end of that move. I enter at 250 and I exit at 301. I enter at 302 and I exit by 313. I trade my puncture and I'm stopped out below the puncture candle. I enter here, I move into profit, $200 again, but then I come and I hit my stop. So with a trend trade, you're right anywhere from 50 to 55% of the time with a profit factor approaching 1.5 to 2. Ted, every dollar that you lose, you make $1.50 to $2. Does that make sense? So here, 15, 24, $1, 16, minus 2, minus 4, minus 8. So now when we go and look at the 5-minute equivalent of that, here's where we start to get into some cool stuff, right? So let's follow all the signals from last night to this morning to this afternoon. The close below the moving average crossover, Ted, until the close of the 9 o'clock signal, $6. 6 or 8? $8. The crossover above the moving average until the next signal, $28. The next signal at midnight last night, 5 a.m. London time, until 1:40 Eastern, 6:40 London time, $31. We knew to look for a long at 3:30 until 4:10, $31. Now we start to experience some losses at the London Open. We finish lower than we started, minus 33. We finish lower than we started, minus 5. We finish lower than we started, minus 17. And now, Ted, hold on. 850 until 935 is plus 59. At the puncture, we only finish a little bit higher with 325. We come within 2 ticks of our stop at the 10 o'clock econ, and Ted, we finish higher by 12 o'clock. The next signal is at 110, and we're out by 155. 155, we have a puncture. It comes down and hits the stop, minus 7. And then 320 at the end of the day, we have a negative $26 move. So using the 5-minute settings, Ted, we have 6, 34, 65, 96, 153, 208, 224, 200, 193, 173, 168, minus 30, 138, 135. Let's call it $130 times $20 per dollar is what? That's $2,600 per contract. For the macro, or $260 per contract for the micro. So Ted, should that even be possible with a predictive time? Those moves that we see occurring up, down, up, down, up, down at the forecast times, that shouldn't be real, right? How is it happening? It's happening because the game is rigged. It's happening because the game is rigged. So, any questions about that before we get started and move forward? How far in the future can you see the signal times? A week? A week? So I have the times right now for Friday, Monday, Tuesday, Wednesday, and Thursday of next week. I have those times right now for those signals. Can we look at the E-mini S&P? Yeah, we'll take a look at those for sure. All right, let me pull that chart up for you, get you started here. All right, so there. Pull this out. Okay, E-mini S&P. Yeah, where's that one we were looking at earlier? I thought we looked at that one from before. We'll use the 3 because it has more signals. Before I do that, Larry, are you still here? I wanted to show you the euro currency on the 15-minute chart. Euro's been getting hammered. All right, cool. So Larry, in your case, the signals I would have advised you to look at were the blue signals. Shorting the euro is like our new favorite pastime here in America. And so we would be short from here to this time, Larry, we would be short from here to here for a small net loss, from here to here for a small net loss, and then from here to here for the next gain. So 83 and 42, I think that's right. And then the next one today was essentially a break-even trade. And now we're waiting for the next signal tonight, Larry, at 10:15. So Larry, can you see how those signals are appearing on the right-hand side of the chart? And we always know when they're coming. That's important for you if you're trading the euro, because how do we know what times of day to be sitting at our computer, right? That's the big key. How do we know what times of day to be sitting at the computer? And that was why a lot of our customers in the beginning were forex customers, because they didn't know what time at night to wake up. They didn't know what time at night to wake up. So over here, that was, what do you want? Gold on a 10-minute chart, forgive me. Gold on a 10-minute chart. Let me get that information for you here. Load GC08, GC08 22. Is that what we're saying? Okay, that's loading up right there. Does this work on stocks and options? Yes. This works on stocks and options too. I'll get you that in a second. Okay, so here are the signals lately for gold on a 10-minute time frame. So for gold, we have the short $2.20, the short $2.60, and then Larry, the failed puncture right here, minus 14. And then here's the big boy, 920 until the close of this candle. It's a $2,500 move per contract. The 310 signal in the afternoon stops out. 10 o'clock at night, probably not trading that one. 4 in the morning, Asian session the next day is break even. And then today, this morning, you had a stop out where it closed above the moving average. Then Larry, it closed back below the moving average. And you re-enter now for 47. So gold on a 10-minute time frame, we have access to those same signals in the future. So Larry, does that make sense? You know the times of day to be looking for the signals. Any questions about that? Is it possible to trade on MT4 and look at the signals on your platform? And not only is it possible, a lot of people are doing that. Larry, there are things I can do too to tune a market. If you'll indulge me, I can find the exact days that banks are following patterns from. So these are the default software values. But Larry, can I just take a quick look here to see if I can't tune the gold chart a little better? I don't want you to think I'm curve fitting, but I can give you times in the future that are better tuned to when the banks are pushing. All right, so let me take a look here and change this over. And I'll tell you what I did and why in a second. We're already getting closer. All right. Gold on a 10-minute chart. Let me try 2 other settings. because the banks are usually hiding their behavior patterns one of 4 places. Not quite. And it bothers me when I see a chart. Yeah, see how this looks already better, Larry? And the signals are starting to line up closer to where we're looking for those signals. What happens is we send the software back into the past, but we send it to very specific locations. So in your case, the original chart, we were looking at a 714 look back. And from an engineering perspective, what we're telling the code to do is look back 7 days in the past and 14 days in the past. Does that make sense? So if I'm on a Thursday with a 714, I'm looking back at 2 prior Thursdays or 2 prior Fridays or 2 prior Mondays. Okay? Well, we had average results when we did that for your chart. The results started to crystallize when I sent it back on a 3-day cycle. So Larry, there are 4 settings that work well, and one of them is always better than the other. We can look at a 714. We can look at a 3-day cycle. We can look at a 9-day cycle. We can look at a 1, 2, 3, which looks at the last 3 trading days, or what I call the hybrid, the 3, 6, 9. One of those settings, Larry, will inevitably tell us which cycle banks are following. And in your chart on gold, that was a 3-day cycle. Does that make sense? So it was better than the default value. And the software comes with those 4 or 5 templates, so you know which one will work better. And then there's this other button here, Larry, that I can adjust the size of the moves we're looking for. The smaller I make this number, if I make it 4, we're going to see a crap ton of signals now all over the place. And that gives us a little more resolution into where the times are coming. So the smaller that number, Larry, the more signals we get and the shorter the movement in between those times. Does that make sense? The larger the number, we're telling the software to look for larger historical movements in the past. So if I change that to a 16, Larry, you see how the numbers of trades decrease, but the moves in between the signals are even larger. So you have a volume knob, in essence, for the size of the moves that you're looking for. So Larry, if you're looking for larger moves, which I suspect you are with gold, you're probably going to want that larger swing strength. And then again, everybody, the times that we're waiting for are sitting on the right-hand side of the chart, warning us what to look for. So Larry, if you get the software and you get me for your training, just remind me which resolution you want. The finer high resolution signals, we turn that button down to see more signals with fewer, with smaller gains and losses. Or do you want the larger swing where we get more signals with larger runs in between? Okay. So when we look at markets like crude futures, for example, you can see this morning again that we have these signals in the direction. Yeah, and Larry, what I do, so for example, I don't want to leave you, you still have questions here. They generally don't. Once we find it and we lock it in, so let me go back to, once we find the date that it's locked into for a market, it doesn't matter. I can go down or up, and the signal, you see, Larry, how the signal accuracy was the same on a 5-minute chart as it was on a 10. Once I know which one of those parameter sets the market is inside of, we don't have to go back and change it. So right now, I know for you, for gold, it's going to be a 3. not the 123, not the 714, not the 9, not the 369. And I can change the time frame lower or higher from the 5 to the 10 and not change anything. Once we find it, it's locked in. And I've been doing it for 13 years, so I can pretty much tell you what it is. How long did that take me? A minute? So you have access to my big brain, which China fears. If you know the big brain China fears reference, you've been paying attention. Yeah. How big of a time frame does it go all the way up to? Well, like for Tesla, we're looking at daily time frames, right? So for Tesla, we're looking at the largest time frame, which is an end of day. We can actually look at weekly and monthly if you're holding trades that long. So Larry, in your case, if we were looking at daily signals on gold, I want you to see all I did was change the value of the date. It's still 3. And Larry, I just went to a daily chart, and you see the signals on the daily time frame. It's still that 60 to 70% on the signals, but it's the 300. It's on a 3-day cycle for gold. So when you get the software, I basically build all your workspaces for you. And by the end of it, you have what is essentially a perfectly tuned piano. And C# is C#. Yeah, down until August 4th. Any questions about that? So if you're trading options, for example, on a longer time frame, it's the same thing. Tesla, we told everybody last week to watch out for moves from June 21st until July 18th. July 18th. So we have 11 more days to go off of this double bottom right here. The signal was coming in on the 21st, so you could have got in near this low if you wanted, or waited one day later from 878.14 to a high, 678 to 755, and now we're reapproaching that high right there. Joe, do you have the software yet? I don't understand what you don't understand. You can use one of the 5 settings that I just gave you in case I get hit by a bus, and one of those 5 will be the most accurate for the market that you're trading most of the time. If you want me to do it for you, I can do it for you and hold your hand. I feel like we're dancing, but we're not in step. So if we look at the ES today for the signals that I gave out, we can start pre-market or at the open. Long from 748 until 833. Long from 854 until 933. Puncture trade at 936 until the close at 954. Long from 954 until the close of 1003. Long from 1006 until 1136. Long from 1209 until 1248. Long from 112 until 124. Long from 145 until 154. Long puncture until 221. Long from 221 until 242. Long here, do we get to the $400 mark? 625, not quite, $300. So we end up actually finishing lower with my system, -4 into the close. So on the day, 4, 9 plus 8 is 17, 19, 20, 21, 17, 14, 13, $8. So today for the ES from the open until just before the close was a $400 day per contract using standard default values. Standard default values. Any questions about that? So Joe, I'll walk you through this one more time if I think you're paying attention. A lot of times people walk away from the webinar, Melissa, and then, or they're talking to their friend or a guy comes from across the street and I explain something and then I feel like I'm explaining it a couple times over. These are the default values that we use for all of the webinar projections. So we don't get accused of curve fitting. But now I'm going to come in here. Let's take a vote. Everybody take a vote with me. Melissa, I'm going to give you 4 different charts, and you tell me which one is the most accurate or the most resonant. That is to say, the settings worked the best. Okay, here's the 1, 2, 3. Okay, so Joe, there's the 1, 2, 3. Let's say we have to pick one of these orphans and take it home. Which one of these settings works best? 1, 2, 3. I think that looks better than the 714, but I have a couple more to look at. The 300. Joe, does the 300 look better than the 1, 2, 3 or worse? Is this microphone still on? It looks better. Yeah. Okay. So we know the 3 is better than the 1, 2, 3 and the 714. Let's try the 9. The 9 is better than the 3. And that's very common for the E-mini S&P. The 9 is almost always the most resonant signal. You say the 3 looks better. I know the 9 looks better, and we can go back and look because of where the entry came in. It came in at 9 o'clock, and we exited right here. It came in here, and we exited higher. It came in here, and we exited higher. It came in here. That's the first time we lose. And then here, and we exited higher. Here, and we exited higher. So the 9 is actually better. We can try the hybrid, which is the last choice, the 369. And customers at home, you could be doing this. You should be doing this. 369. The 369 is too many signals. Let's increase the swing strength back to 15. The 369 is a close second to the 3 or the 9, but not as good. But Robert, this one's better than the 714, right? So one of those 5 charts, one of those 5 settings will be the perfect setting for your market. So we know for Larry that his gold is a 3000. I know it. When he sets up his charts tomorrow, he'll have the most accurate predictions for his market. And then those predictions will be right 60 to 70% of the time. Okay. But the point I'm trying to make is when you get in for like gold, for like CL right here, try to use a setup in the direction of the trend. In CL, you had a $2,320 move followed by a $560 move. Your first stop out of the day, followed by your next gain going into lunchtime. 1230. 1230. Did I miss any of the other markets that we were looking at? 6E15, GC10, NQ, ES, CL. I think we covered all those. I think we covered all those so far. Any questions about any other markets that we haven't looked at? We looked at, oh, I didn't look at, no, we did cover that one. Were there any other markets that we wanted to analyze while we're in here together? What is GU? Oh, the pound? The pound dollar? Robert, what size bar? What size bar, brother? 5 minute? Okay. This is the euro dollar on the 60-minute time frame, Robert. And I just wanted you to see what the settings are if you're a forex trader at home. This is a 714. Andrew, the CL was just the 714 default value. So pound dollar on a 5-minute chart. Come here. We'll go down to the 5. Boris Yeltsin, Boris, what's his face, is gone. So here's the default value today, Asian through the European through the American session. And Robert, without really changing anything, can you see how we're in that ballpark? The 714 in this case is actually the ideal. And then you can see the times again waiting for us in the future. And that's really what's great about this, right? We have the times on the right side of the chart that are here. So we already know the signals going into tomorrow right now. And Robert, if that's too many swings and you want to have a bigger swing strength, then we just make our swing bigger. And now the software is looking for larger moves. The larger you make that number, the larger the number of moves. So we go from 15 to 30, and now it's even bigger moves, fewer signals. If you're trying to scalp or get in there and do smaller things, we can get down below and get a bunch of signals at the different times. What I generally try to do, Robert, is I try to have a signal near every one of the most important pivots that day. I try to have signals near the actual highs and lows. And I'll tune my swing until I'm seeing where the major swing highs and lows are coming. So I'll reduce that number until I get signals right around those points. And that tells me that I'm in the ballpark right there, which was what our default value was. So there I'm getting 2/3 of the signals at that point. And then if we accelerate this up to a higher time frame, we can go to the 10-minute chart, we can go to the 15-minute chart, and this accuracy is the same. Go up to the 30, same accuracy, go up to the 60. Does that make sense? So if you have it, you have access to, again, the big brain, which is telling you what the best settings are. But if I get hit by a bus, you guys now know what I do when I tune a chart for a customer. And once it's tuned for life. It's finished. I can tune a piano, but you can't tune a fish. But I'm pumped. And this is the chart for Ethereum today for those of you that were wondering, does this work on cryptocurrency as well? You can see the times that we would have asked you to look for longs from here to here, from here to here, from here to here. This would have been a stop out puncture from here to here, small loss, puncture with trend until here, and now we're long again up there. So 1, 2, 3, 4, 5 wins, 2 losses, smaller losses. The gains are on average 1.5 to 2 times or more than the losses. Interesting thing happening in Bitcoin right now for those of you that follow the the crypto world, you'll see that the daily signals have been pretty much spot on for that market. But if you're a crypto trader, you're looking for opportunities. I want you to notice the last section of signals here. And who can tell me what's going on that might present an opportunity for either micro Bitcoin futures, or the actual currency itself? Well, interestingly, Robert, look at this. We've been seeing drops and drops. And Robert, do you notice when it gets to the buying signal, people take profit and it goes sideways? People take profit and it's been going sideways. Now, Robert, there's something very unusual happening at this signal right here. What's happening? It's not dropping. Meaning it should have been doing this, right, Melissa? So think about this with me. This is how I use the software, kind of an advanced level. They were supposed to drive it down on June 29th until July 8th. And Andrew, they didn't. And they tried for one day. And then a second day, it didn't hold. And then a third day, it came back up. And then a fourth day, we're right back where we started on June 29th. And Andrew, can you see what's coming up here? Tomorrow. This is the first of all of the sell signals so far that hasn't produced the behavior pattern that we're expecting. So what is that telling me? What is that telling me about institutional intentions? They're plotted, Larry. Yeah. It's telling me that tomorrow there's an opportunity, today into tomorrow, for a potential large reversal upwards in Bitcoin, up out of this area. Other than the fact that it was supposed to go down from here to here and it hasn't. We're higher than we started. There's no institutional hunger, thirst for dropping it any lower. Those sellers, Robert, have stood aside. And so when I see that signal, I'm instantly drawn to the next one, this guy right here. I'm not, a certified trading advisor, but I would be paying attention tomorrow into July 25th on crypto. And we may, how large of a move might we see? The last time we had an up move, Melissa, was back here from the open until the high was that large of a move. And then if you transplant that over here, that could bring us let me get that lined up on the signal. That could get us to 30,000, 31,000 by July 25th. Just something that I noticed. So Larry, was there a reason for the question? Are they plots or drawings? Well, Robert, whatever they want to do, what I know and what I saw was that the time they were supposed to sell, they didn't. They've been like clockwork, regularly selling. February, March, May into June. And then the last signal here, June into July, they didn't. I don't care why or when or what their intentions are. It tells me that the guards at the bank aren't at the vault. Somebody was supposed to sell and they didn't. Oh, so Larry, yeah. So that's the cardinal sin. The cardinal sin of indicators. So 100% on my children's lives. The signals never redraw, never repaint, never disappear, never reappear, never consult psychics. They are 100% forever and ever, amen, locked in, carved in stone forever. If we come back 50 years from now and Larry load 50 years of data, the signals for today's webinar will be the same. Otherwise, you can't tell if the back test is working or if your forward testing is working. I've had customers where if the support level fails, they delete it. Have you ever had a tool like that, guys at home? When the signal fails, they delete it. It's not there anymore. It disappears into the ether. I don't know how those people sleep at night. Oh, no. No, I completely understand. I paid for that tool. And that's, Robert, one of the reasons why I went out of my way with Larry to show those settings, because I don't want to be accused of curve fitting. So I don't want to set my webinar up every week with different settings to make the software look better. So I always show the 714 signals for everything every week. So it's constant. So you know that I'm not doing anything funky. But I want you to know that the 1, 2, 3, the 3, the 9, or the 3, 6, 9 may be better alternatives. No shenanigans, right? I want you to see what happens when we use the default values and we're watching these charts week after week. I want you to see what's happening at those times, right? Yeah, I think this may be the push tomorrow, but we'll see. So in that sense, Larry, I try to build credibility with you that way so that you know I'm not pulling a fast one on you in the other ways. Does that make sense? Yeah. Okay, cool. All right. So when we finish here, I basically set out to sort of prove that our belief is true, that banks are in fact pushing markets up and down at different times throughout the week and month, and that an intelligently trained program can search those times, find those times, and project them in the future for you to prepare. And it worked on the markets you asked me to look for it on, the ES, the NQ, the euro, pound dollar, gold, all of it. All of it. And trading is ultimately about the future. Those of you looking at things like structure and volume and blah, 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 that's all stuff in the past. And that's what banks want you to watch. They never want you to think or consider what I've shown you here today. Think about what might be coming up next. Because then you have the edge. And they don't want you to have that edge. They like you to believe that there's no wizard behind the curtain, that it's the all-powerful Oz and not a 4'6" tall man with mommy issues, right? The other big benefit of this that the customers tell us about is when they know the signals are coming in the future, they are psychologically predisposed for success. They can measure risk, they can measure reward, they can plan their trade, look at structure versus, is the trade coming now? Is it coming now? Is this my signal? Is it going to be next? I don't know what I'm doing. This is a bad choice. My mother was right. I should have been a lawyer. All that stuff that goes through your head. So this is what we believe. And for 13 years, we built a company around that and software to help you accomplish those goals. There's lots of pictures here, but this is ultimately what I wanted you to see here today. This is I don't know how many thousands a year old this quote is, but if you want to win at trading, you have to know the enemy's timing. You have to know the enemy's timing. Okay, here's the cool part. I want to tell you how you can get the software for yourself if you want, but I didn't change the promo code from the 4th of July stuff. So if you'll hear me out, you can take advantage of my malaise as I tell you how you can get this for yourself. No, Robert, you're pretty cool. Larry, you asked some pretty great questions too. Thank you for, and always continue to ask those types of questions. And I hope your spidey sense wasn't tingling when I gave the answer. So you knew from me as an engineer that was the worst thing you can do. Putting signals that disappear away is like cheating on your wife. It's like the game ender for a vendor. The minute I do that and someone finds out and puts it on a forum somewhere, Larry, my business closes. So I can't do that. I wouldn't want to, but even if I did, there are people watching to see, which is why we give the times out 2 days in advance. I can't change them once they're out there. All right, the program that we're talking about is called TachEon Warp. Warp has been around for a while. Robert, you just took part in the demo. I gave the times out 2 days ago. Wednesday, Thursday took place. We looked at them for the E-mini NASDAQ, the E-mini S&P for oil futures, gold, the pound dollar, Bitcoin, Netflix, no, Tesla, and the euro dollar, and everyone agreed that it was 60 to 70% or more on the signals, and all of the charts that we applied a simple trading system to had anywhere from a $400 to a $2,500 potential net gain. So thanks for taking part in that trial with us this week. TachEon Warp, we have 81 reviews on Trustpilot. Anyone can leave a review. We can never delete one or take one down. The link for that program is going to be in your go-to webinar chat box. Blah, blah, blah. How do I paste that into there? There it is. Yep. Andrew writes, if there's anything wrong with this program, it is the person using it. Following the rules, it works every day. Thank you, Andrew, for that. Andrew is a real receipt-bearing, credit card-owning customer using our software. I appreciate that feedback, bud. At the bottom of this page is a giant orange Buy Now button. And if you go to the purchase page, I believe, what was it? Was it Warp 4th? There's a promo code that still exists from Independence Day. And if you'll bear with me 1 minute, I have it still if you want it. And it takes $750 off the price. July 4 Warp. July 4 WARP. Does that still work? Yeah, it does. All right. So Len, Robert, Richard, Larry, Billy, Bobby, Frankie, Susan, Johnny. The promo code left over from Independence Day is July. What did I just say? July 4 WARP. That is the lowest price it's going to be all year. Everyone said we should increase the price to $3,500, and I've been fighting them because I want this to be affordable for retail traders. It's an institutional grade piece of software and system, but I want you to be able to afford it. This will take $750 off the lifetime license of the software. It is a one-time purchase. You are entitled, of course, to the standard 2 licenses. Put one on a desktop or a laptop. This comes with free installation and training. So we'll set you up with the best settings. We'll set up all your workspaces. I'll save all of that and record the entire session for you. Again, we have a 4.8 out of 5.0 Trust Pilot rating. That is real customers with real receipts. And we can't delete any reviews that are posted. Our very first review is a 1-star review. Go check it out if you don't believe me. That was fun. This works for futures, forex, cryptocurrency, and equities. We can go from second base charts up to daily and weekly charts, monthly if you push the CPU of your computer. This works on tick bars, range bars, Renko bars, volume bars, non-time bars, believe it or not. It's a little screwy, but it works. And we can tune those signals as accurately as we tune regular minute-based bars. So if you're using a Renko and you want to use these times with your Renko bars, not a problem. We've been around for 13 years this May. And so that's quite a long stretch in this industry. We've worked very hard to cultivate a culture of trust, and we believe we have a small family type relationship with our customers. We know about them, what their goals and hopes and dreams are. And so we would love to have you as a part of our small family. We have pro staffers alongside of us here, customers that are trading futures or forex or longer daily trades or options. If you need help, we can put you in touch with them. People that have been using the software anywhere from 6 months to 6 years are available for you to consult with if you need any help. And we also have a live trading room that meets Tuesday, Wednesday, Thursday, where my partner and best friend is using the software in a live environment to show actual entries and exits for those of you who need real-time hand holding. Larry, the difference between those 3 programs, and as of today, we're going to bump Alpha into Force. Depends upon the method of prediction. So right now over here with Warp is involved with data mining. We're essentially finding historically unusual recurring time patterns up and down. Okay. So Warp stands in a class of prediction that is on par with what a very smart man said a long time ago. This is William Delbert Gann from Lufkin, Texas, who said, by studying the past records of the averages of individual stocks, you will be able to prove for yourself that history does repeat, and that by knowing the past, you can tell the future. So Gann's first crack at time study involved looking at historical patterns and then projecting those patterns into the future. Okay, so Larry, that falls into a class of software known as data mining. We use the data to tell us what the patterns might be. Okay, does that make sense? On the other side of that line, and the reason we're including Alpha with Force as of this week, is you have what are essentially extraterrestrial signals. And so Alpha, for example, is using solar and lunar patterns to predict market movements. And then Force is based on vibrational law. In the end, at the termination, I guess you'd say, of Gann's career, he comes across something called the law of vibration. And he believes that the law of vibration determines everything. And so Force is actually the most accurate program that I have. It's a 2-day workshop. We work one-on-one with people and teach them what's essentially a 150-year-old method that still works today. But for example, while we're here, if we looked at the E-mini S&P on a daily chart using one of the alpha tools, let's see, ES0922. I think this is cool. Larry, you might not think it's that cool, but I think it's cool. Daily DCM, okay. I want you to check this out. Larry, I'm going to get rid of everything but the major phases on this chart, which would be the second and the fourth phase. And can you tell me what's been happening in the E-mini S&P at the red dots? Actually, I forgot to do one thing. I forgot to do one thing. 1 and 1. It's 1 and 1 for the ES. There we go. So Larry, do you see how the markets are dropping at the red dots and going up at the green dots? Or bottoming out, essentially? No. And this is a technique that Gann popularized back in the early 1900s. This is a full moon. And this signal is a new moon. Hello. How was your day, sweetheart? He was a good dog. So Larry, all of these signals on the chart are new moons and full moons. Go ahead, close that door. There's about 200 degrees of heat coming through. It's over here. So Larry, this is the new moon, and I have all the plots appearing 1 day in advance. So if the full moon is on October 30th, I plot it on October 29th. Does that make sense? Do you know the best part of this, Larry? I know in the future when the next signal is coming. In 4 days and 23 hours from now. So in 4 days and 23 hours from now, I'm going to put the signal over here. Would you say that's a predictive system? But it's based on something weird. It's based on what is essentially an extraterrestrial signal. We've studied it and determined that there's a correlation between the Earth's electromagnetic field strength and human psychology and physiology. Pretty heady stuff. So that's kind of where alpha and force veer into. If we look at force from a vibrational perspective, we can see that markets have an ideal resonant frequency. So if you look at these charts, can you see these signals okay, Larry? I'll put the ES chart up here real quick. And this will give you some sense of how vibrational law works. So here on this chart, we'll pull it in and tighten it up a little bit. All these signals going back, you'll see, Larry, that the lines are at the same distance from each other, right? Gann believed that with vibrational law, there was a unique frequency for every market and time frame. And he said stocks like atoms are centers of energy and as such must follow mathematical procedures. And so Larry, he believed that any instrument could be tuned like a guitar string, and that if we knew when the home point was and what the spacing was between the positive, negative, positive, negative, positive, negative, positive, negative, we could forever sort of understand when those signals were coming. So on this chart, these lines are 2 years old. I want you to see what's been happening at each of the signals as we arrive at that date. The last signal was down here on June 16th. And now I'm actually right now expecting this to push up a little bit and get above the high before it drops. So in your case, if we go back and we look at gold, and I didn't mean to turn this into a force fiasco, and we look at what did you say, a 20-minute chart? I'll do a 10 with your permission if that's okay. And we'll do the 30. 30 is closer to the 20. Here we go. So Larry, on this chart, what I can in essence do is I can look and see where are the lows and highs coming in, and I can tune that chart to essentially find the vibrational frequency of gold, and with a little bit of coaxing, I can find the resonant frequency of any market and time frame and know what the distance is between the highs and lows. In essence, if I hit a glass with a spoon that has water in it, Larry, it makes a note, right? Ding! Gann taught us 150 years ago that if we hit gold with a spoon, we can find the note. And that's what force is. So that's the difference between the programs. Warp is sort of the entry level, gets you to that 70% level, and force is essentially, I want to know everything there is to know about why markets go up and down. Force is based on vibrational law, the idea that every market has a resonant frequency. And again, that all ties back to the electromagnetic field strength and how that influences human behavior. It's a pretty powerful correlation. But Warp says, all right, I don't want to know much of that. I don't want to know any of that. I just want to push a button and see the times. And so Warp is more data mining. Force is based on frequency. Did that explanation make sense, or did I confuse you even more? I mostly use big words, so you'll think I'm smart. So yeah, it's pretty cool. It's pretty cool the way it works. And we can look at how those signals influence gold or the euro currency, but it's all the same stuff. The markets are not random, they are predicted. And with just a simple analysis tool like that, we can see what's coming up. Yeah, Hurst went in a different direction, not to lose everybody here, but Hurst essentially said that, and I met a guy who tried to build a program to do it, and it was horrible because it actually recalculated all the time. To use Hurst, you have to recalculate. And Hurst theory was based on this idea that you have smaller cycles inside of the bigger cycles. And with Hurst theory, Larry, you had to use something called Fourier transforms. Do you know what I mean by that when I say that? You use Fourier transforms that essentially say we can look at the pattern of a market. So let's say the ES or gold, for an example, has a waveform that looks like this, right? Yeah, Elliott recalculates all the time, sure. That's why I like time. Time never recalculates. So let's say that your gold chart, Larry, it comes up and it goes down, and then it kind of does this and it goes up. Hurst and Fourier transforms say we can take this curve and we can feed it into a formula that tells us what the subcomponent waves are inside of it that are added up together to produce that wave, right? And Hurst tried to say essentially, hey, if we know the subcomponents, then we can predict where that wave is going next. And the problem is it doesn't really work that well. It's very complicated, and it recalculates all the time. Gann comes along and he says, listen, when that thing in the sky at night is really bright, people lose their minds. They have sex and make babies and bad decisions about purchases. They buy cars and houses and candy and macaroni and cheese. And then when they walk outside and they look up into the stars and it's dark, they feel fear and despondent, and they question their life. They watch sad movies, and they sell those bad investments. All of that's tied back to the electromagnetic field strength. Humans actually have magnetic field sensitivity in a certain region of their brain that scientists discovered and clinically documented about 3 years ago. Now, my question to you is this: if banks know this, if banks know when Larry's going to wake up and feel excited about buying the euro, excited about gold, I got a feeling it's going to go to 2,000 again. They're going to make it look incredibly attractive. Everything is changing the magnetic sensitivity, Thomas. Once you know that we're sensitive to it, now you know that we can be influenced by it. And if we can be influenced by it, the person that controls the thing that can change the electromagnetic field has a lot of power, don't they? Interesting. So anyway, that's the difference between all those programs. And I'm sorry if I confused everybody by that. But I promised myself I would always answer that question if someone asked it in a webinar. The good news is 98% of people start out with this one, Larry, if they want to get started. And there's a juicy promo code there. July 4 Warp, all lowercase, no spaces, strike next to those things to each other. So I want to help those of you that want to have this for yourself. I would love to get you started and set up and do all these wonderful things together. And if you trust me enough with this, I wouldn't mind if you wanted to get Force, or if you're an existing customer and you're ready to go deeper, let me know. We have a couple students that we're training right now that are doing really well. So I'm here for that. Okay, thank you for your time. If you are signing up, please let me know. Otherwise, I want to thank each of you for hanging out here with me. Tomorrow, if you trade without this, you're essentially saying no worries, Earl. You're choosing to trade blind tomorrow. And Larry, no disrespect intended. No disrespect to Ted or Colin or Robert or who's the other gentleman here? Speaking to him earlier, Joe. Guys, don't trade tomorrow without this. If you know that it's happening, and I proved that it did, if you read the reviews and see for yourself what people are saying and have done and accomplished themselves, then choosing to trade without this is akin to walking into a freeway with a blindfold on. Hey, why would you do that? You can put a pair of glasses on and see the cars even clearer. You'll know where they're going to be before you step out into the road. Nah, my way's better. I use volume. Okay. If you're doing well, this will help you stretch your targets out and have an even smaller stop threshold. Customers report using smaller stops because they know when the trade should work, and if it doesn't, they get out right away. If you're in a winning trade, Larry, you're doing good and you just want to extend your runners, but you have no idea how long the trade's supposed to last. Is it 3 bars from now or 30 from now? The software will help you extend your runners. And if you're a new trader, it will prevent you from being in the wrong side. If your brain says go long and there's a blue dot on your chart, please don't go long. Wait. If your brain and your volume tool or your market flow, blah, 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 says go short, and there's a big fat white dot sitting there and they're getting ready to run the stops and drive it up, please don't go short. So at that beginner level, it will prevent you from making stupid mistakes. At the intermediate and advanced level, it'll help you reduce your risk and extend your targets. Across all levels, you'll be proactive, less stressed, more confident and comfortable and relaxed. And most importantly, you don't have to sit at the computer all day. You can plan your trades, days of the week, hours of the days of the week, go to a restaurant with your friends, go play golf, do the things you love to do, come back and take a trade. I have a customer who used this program to time when he could paint his house. 20 minutes between trades, he'd go upstairs and paint one room's wall, and he'd come down and take a trade. It worked, it didn't work, he'd go out and trade, paint another room, come back by the next time. We think that the longer you sit at the computer staring at your signals, the worse you're going to do. And so this will give you some freedom, some confidence, and comfort, and it'll be more enjoyable. Knowing when the bus is leaving versus running to the bus station every day to see what you can catch. It's a completely different experience. So I hope you were impressed by my big brain. I hope you'll want to join up with us in our 4.8 out of 5.0 rating customers. I hope that you won't choose to trade blind tomorrow. Do reach out to me if you need help. I'll put my contact information on the screen here in case you need to talk to me. Michael at backtothefuturetrading.com. My phone number is 336-703-7667, and I'm in North Carolina. Yeah, I want to help. I'm really good at it, and we've spent 13 years perfecting something that people are using every day and love. So let's get together. Let's do this. May the wind be at your back. May the sun shine upon your beautiful, handsome faces. May the valleys rise up to meet you, and may the mountains lay low before you. This has been a series of challenging years. People on both sides of the aisle disappointing us left and right. Anger, frustration, angst, disease, pandemic, inflation, recession, depression, war. Books will be written about us for generations to come. Let us be kind to one another. As Bill and Ted said, be excellent to each other. Let us continue to strive to take as much money as we can from the institutions who strip mine the economies of the world every day for their purposes, without restraint, without any type of penalties, substantial penalties, no jail time. They continue to, I believe, rape and pillage the financial universe. And so if you'd like to take some of that money back and use their own times and patterns against them and join our family of 4.8 out of 5.0 Trustpilot reviewers, I welcome that challenge and look forward to working with you. Earl, as soon as that thing comes out, I'll make sure I Skype it over to you. I'll make a note on my phone to come up here and check the recording. I love all of you. Thank you for being a part of us, for supporting us, for continuing to be your excellent selves as customers. And thank you, gentlemen, for coming here and checking us out. I hope I hit your bar of integrity. I strive to come here, never lie to you while I'm doing a webinar, to use the most honest approach I can. We've given you the times 2 days in advance. We came back 2 days later, applied a simple system that we gave you before the times were even publishing, and the system is just net profitable. So that, coupled with my Eagle Scout merit badge, sash, laden on my honor, I will do my best to do my duty to God and my country memory, I hope that I've maintained that level of integrity and honesty and impressed some of you to at least be open enough to hear what I have to say. And if not, I am sorry for having failed you. I tried my best. Everyone have a great night, and we'll see you back here next week. Welcome on board to our new customers. We'll talk to you soon. Bye-bye.